Why monthly payments feel harmless until they control your life. Have you ever looked at your bank account at the end of the month and wondered where your money actually went? You earn a decent salary, you pay your bills on time, you aren't buying luxury watches or taking private vacations, yet somehow, every month feels tighter than the last. For many people across the United States and Europe, the problem isn't a lack of income, it's something much quieter. It's the collection of small monthly payments that slowly become permanent parts of life. Let's imagine someone named Daniel. Daniel is 31 years old and works in marketing. After taxes, he brings home about $4,200 each month. His apartment costs $1,500. His car payment is $420. Insurance adds another $180. Student loans take $260. His phone plan is $75. Streaming services total around $60. The gym membership is $45. He finances a new laptop for $55 a month and pays around $120 toward his credit card balance. None of these payments seem unreasonable on their own. When Daniel bought the car, the salesperson didn't talk about the total cost. They asked a much simpler question. Can you afford $420 a month? When he upgraded his phone, the advertisement didn't say the device cost over $1,000. It said, only $25 per month. The laptop, just $55 a month. Every decision was presented as a small monthly number instead of one large financial commitment. That's where the story begins. Our brains naturally prefer smaller numbers. A monthly payment feels manageable because it separates us from the true cost. Instead of asking, should I spend $30,000 on this car? We ask, can I fit another $420 into my monthly budget? The purchase feels smaller, even though the financial commitment lasts for years. This way of thinking doesn't usually happen because people are irresponsible. It happens because modern consumer finance is designed around monthly affordability. Car dealerships, phone companies, furniture stores, and even travel companies know that people make decisions differently when the price is divided into smaller pieces. Over time, those pieces begin stacking together. Imagine Daniel's monthly obligations: car payment, student loan, phone financing, credit card payment, subscriptions, insurance. Each one seemed harmless when it started, but together they quietly consume well over $1,000 every month before Daniel even decides how he wants to live. Now imagine receiving an unexpected medical bill, or losing your job for 3 months, or simply wanting to reduce your working hours. Those monthly payments don't disappear. They continue arriving with the same consistency, regardless of what's happening in your life. That's the hidden cost people rarely think about. Monthly payments don't just reduce your income, they reduce your flexibility. And flexibility is one of the most valuable forms of financial security. Let's look at the math. Suppose someone commits to an extra $350 monthly payment. It doesn't sound dramatic, but over 5 years, that's $21,000. If that same $350 had instead been invested every month, earning an average annual return of 8%, it could grow to roughly $25,000 over that period. The difference isn't just the money spent. It's the opportunity that disappeared. Money committed to fixed payments can't easily be used to build investments, create an emergency fund, or give you choices later in life. So why do intelligent people keep making these decisions? Because money isn't only about mathematics. It's also about psychology. We compare ourselves with friends, coworkers, neighbors, and even strangers online. We see newer cars, better apartments, modern kitchens, expensive vacations. Without realizing it, our definition of a normal life slowly becomes more expensive. Monthly payments make that transition feel painless. Instead of making one large decision, we make dozens of tiny ones. Each feels affordable. Together, they quietly reshape our financial future. Financially thoughtful people often approach these decisions differently. They don't ask whether the monthly payment fits today's budget. They ask what that payment will prevent them from doing in the future. Will it delay investing? Will it reduce flexibility? Will it make changing careers more difficult? Will it force them to keep earning the same income simply to maintain their current lifestyle? That's a different way of thinking. It focuses less on what can be purchased today and more on what kind of life those financial commitments create tomorrow. Real wealth often looks surprisingly ordinary. It's not always the newest car or the largest house. Sometimes it's simply the ability to say no to work you don't enjoy, the ability to take time off, the confidence that one unexpected expense won't become a financial crisis. Those freedoms rarely appear overnight. They are usually by